But the true pain point initially in small businesses tends to be cash flow. And then as they grow, it's, well, how do I know if I'm profitable? Things that you talk about all the time, right? It looks like I'm profitable on my income statement, but I don't have any cash. Why is that? And so talking through and helping to educate that. So those are the critical areas up front.
Hey, it's the Profit Answer Man, Rocky Lalvani. If you're new to the podcast, check out my interview with Mike Michalowicz. It's episode number 2. If you want to hear about each chapter in the Profit First book, go back and listen to episodes 3 through 13. Episode 1 is the why and how. On the Profit Answer Man, we learn money mastery without all the complicated accounting mumbo-jumbo using a simple system. Your accountant is busy documenting your transactions and creating a rearview mirror of what happened. My guess is you don't even look at the reports they sent you. If you're like most business owners, you struggle with this, and it's not your fault. We aren't taught money in school, and accountants aren't taught how to be profitable. The Profit First system created by Mike Michalowicz works, and he certified me to help you implement the system in your business. Remember, the new equation is sales minus profit equals expenses. Let's face it, without cash flow, you can't pay your employees, buy needed materials, or pay your mortgage and support your family. I help you to do that and more, so you can focus on the parts of the business you love and receive the rewards for your labor and investment into your business. The stronger you are as a business owner, the more jobs you create, the better we are as a country. Small business owners are the backbone of America, and for that, you deserve to be well rewarded. Just remember, more revenue does not equal more profit. That's why we focus on the bottom line. Today, we're going to cover the basics of what a good finance and profit management team should look like. Let's face it, if you don't know the score, how can you pick the play? Our scoreboards need to tell us where we stand, how much time we have left to hit our goals. We should also know what the plan is for the next few months to hit those goals. We're going to chat about this and so much more. Today, we've got Jason Kruger. He is the president and founder of Signature Analytics. He likes shaking up the way business owners run their businesses by highlighting the gaps in data and reporting that many business owners face and sharing insights on how to improve profitability, increase productivity, and run your company smarter. Gee, these are my favorite topics. Jason has 20 years of experience in the accounting and business advisory field, working with mid-market companies and nonprofits. Let's meet Jason and learn from him. Welcome to the Profit Answer Man, Jason Kruger. It's great to have you join us today.
Thanks, Rocky. Appreciate you having me on.
I am looking forward to our conversation. Can you share a little bit about yourself and your business?
Yeah, sure. I started my career 25 years ago now in accounting and finance world, mostly in the public accounting world. So I spent a lot of years with Deloitte, which is one of the large public accounting firms globally. That does a lot more than accounting these days. Lots of consulting, lots of different things that they're involved with. Spent close to 10 years in public accounting. And then in 2008, I started this company, Signature Analytics. And what we do is, in its simplest form, it's outsourced accounting and CFO advisory. But it's really working with companies to assess their current infrastructure, define where they're lacking financial and accounting leadership, and ensure that they have an efficient processes to not only pay the bills and invoice on a daily basis, but also to close the books effectively, timely, accurately, and then ultimately for the business and business owner and management, can we get them good reporting, financial reporting metrics that they can use to make decisions to continue to grow. And so it's we're able to integrate within our clients' existing teams, and in most cases, in other cases, we take over everything. but it's really focused on the goals and objectives of our clients and what they're looking to accomplish and making sure they're getting the information timely and accurately to do that.
And that makes a lot of sense. And I'm just thinking from, just knowing the types of listeners we have and how business owners are, how do they even know if they have an efficient accounting process and that it's working properly and whether or not there's issues? Because none of them are accountants and they don't want to be.
Right. Yeah, it's tough. And, usually the first signs are when the business owner or the company starts feeling the pain point, right? And I think that the first pain point is cash flow. Cash flow is critical for small, mid-sized, for every business, but especially in the small, mid-sized business community. Cash flow and understanding your cash flows is critical. It's important to understand what happened historically, but also what's going to happen as we look forward. So the first thing that we do is sit down and say, okay, let's make sure we have clarity on your cash flows as we look forward in your business for the next 13 weeks. That's one full quarter of time. And we want to make sure we have clarity in what that looks like. So that's number one. So that's the number one pain point that we see a lot. And then from there, it's okay, how do we have a process to, everything from efficiently paying bills to manage cash flow effectively, our invoicing and our AR processes to manage cash flow effectively, and then ultimately closing the books consistently at a minimum monthly. So you have good information and you have good reporting on what actually happened. And that then allows you to make the right decisions. But the true pain point initially in small businesses tends to be cash flow. And then as they grow, it's, how do I know if I'm profitable? Things that you talk about all the time, right? It looks like I'm profitable on my income statement, but I don't have any cash. Why is that? And so talking through and helping to educate that. So those are the critical areas up front.
And that makes a lot of sense. It's funny how many vendors don't actually even appropriately bill in a timely manner and then have a system and process in place to make sure that they're getting paid and that it's occurring in a timely manner. Because if you don't get paid for 30 days, chances of you getting paid drops dramatically. And if you're not paying attention to that and knowing who is and who isn't paying you, it's amazing what a mess can occur. And I think for the smallest business owners, that is one of their biggest struggles is getting the bill out the door and making sure that it actually got paid and then tying it back appropriately. Because, if money comes in, how does that match up to the invoice depending on how it's coming in? And these days, too many people are taking so many different app payments. I don't know how you keep track of it all and tie it all together. And that makes it difficult. So I think part of that is having a good process in place and then making sure that everything ties together and that you actually get a month-end close. Because I think a lot of times people go to their CPA who does taxes.
Right.
And the CPA does the year-end close.
Right.
And they don't get reports until the taxes are done.
Right.
And that's tax reporting. That's not business reporting. So you can't truly answer the question, is my business really profitable?
Right. Yeah, exactly. And we talk about that a lot is we hear, I have an accountant and it's their tax advisor who maybe checks in once a quarter at best, maybe twice a year. A lot of times once a year. And I kind of call that the flyby, CFO or the flyby accounting. It's, hey, we're going to do a flyby. We're going to just, hey, everything looks good. Great. Okay. We'll see you next time. And you're really not getting value out of it. So what we want to do is transform the accounting and finance function from a necessary evil of, hey, I gotta account for this stuff. I gotta collect. I gotta pay, to value add to the business or organization. And as companies grow and they mature, and as they want to mature, I don't know too many companies that have exceeded 10 million, 20 million, 30 million that really don't have a handle on their accounting and finance function. But I do see a lot of companies that are stuck in neutral and they're in the hamster wheel because they don't have that visibility. They don't understand their profitability. They don't understand their margins. They don't understand their cash flows. And so it starts eating up in so much of their time and efforts. And so that side of the business, being able to invest in that the right way is critical.
Is we'll just sell more.
Right.
Even if selling more is unprofitable.
Right. Exactly. And I think the AR process you mentioned is so critical because what we see a lot of times is it's just, okay, well, the bookkeeper will take care of that. And I, as the business owner, will continue running my business until cash gets tight. And then you say you want to look at the AR aging or listing and that's not accurate. And so then it's like, okay, who do our clients really owe us money or do they not owe us money? And so having to reconcile that. And we've seen that quite a bit where what you think you're owed from an AR perspective is not actual reality because things have been applied incorrectly in the accounting system. And so we see that a lot. And those are obviously from a cash perspective, that's critical.
And even when you have monthly recurring revenue, because the amount's the same every month, if they skip a payment and you don't notice, then that's a big chunk. And it's funny because I've run into issues myself and I know what to do. And I do have good processes, but at one point, QuickBooks changed the way they were sending out my invoices. So it was going into an automated invoice system and the PDF was no longer attached. Of course, QuickBooks doesn't tell me this. So I didn't get paid. And so I had to go and that one vendor paid me different than all my other clients did. And so I had to make sure that I actually did that. And other times with others, especially with email invoices, they get buried or they end up in spam. And you got to make sure, and you got to have that system in place to make sure you're actually getting paid. Now, if you're taking cash at payment or you're taking, a credit card when it's done, that works. And we'll talk a little bit later about credit cards and fraud because it's becoming a much, much bigger issue. But we'll get to it. And the other thing is, if your financials are so old, they don't matter anymore and business owners don't look at them. And that's why they've got to be relatively relevant. But more important, and you made the comment, we always have to look forward. And so in order to look forward, you need that forward cash flow or that forward lead flow or what's going to happen tomorrow, because that's what most business owners are interested in.
Right. And most business owners that we work with, they want to grow. They want to continue to grow their business. And so cash is critical in understanding that because now they want to grow. They need to hire more. They need to incur additional costs. They need to invest in their business in people or product or whatever it may be. And having good financial information will give you that confidence to know, okay, I can make this investment. I can hire this person and I know that it will be a fruitful decision because I can support that within the company. And this should be the, ultimately the return I can get on that investment. Without that, you're kind of flying blind and you're crossing your fingers. You're hoping for the best that cash flow can carry that decision, but can be a scary decision to make.
But the second part of that is actually having a trigger point to say, were my assumptions correct? 30 days, 90 days down the road, you said that bringing this person on was going to increase your revenue. Did it?
Right.
You said this person was going to increase your efficiency. Did it? Did this piece of equipment actually deliver what was supposed to be delivered? Because if it's not, then you need to undo that decision. But if you're not clear and you don't have metrics to measure it, you're constantly going down bad roads and they compound.
Right. Yeah, absolutely. I think we're definitely aligned there.
Yeah. And so that's a big part of it. What are some of the surprising to you things that you see sometimes working with business owners and their financials?
I mean, it goes back to what I was talking about before, which is in most cases, a business owner needs to feel, I'd love if business owners were proactive in getting things set up, and the processes in place at the beginning. What we see a lot of times is a second-time entrepreneur or a third-time entrepreneur or somebody who has had experience having gone through that before, they understand the pain points that they went through the first time. So they make sure that they put the value in the areas that they know they need value in. Accounting, finance function is one of it. HR can be we think of as a throwaway, but there's tremendous value in having the right individual driving HR associated with your business. Sales, marketing, operations, those are the key core components of a business. But we see so many times, again, it takes that pain point or it takes a point where a company or a business owner wants to obtain some level of financing. So they're going to a bank and the bank says, hey, great, you look like it sounds like you have a good story, you have a good company. The first thing they're going to ask for is send me your financials. And if you hit print on QuickBooks and you just send the financials, you're losing credibility from the bank in a lot of ways, or could lose a lot of credibility. And they don't necessarily represent the story that you want to be telling to the bank. You want to be truthful. You want to provide them with accurate information. But I think the way and the format you provide that information to the bank can add to that credibility and can really increase your chances and types of financing opportunities that you can get. And so we see that a lot of times, which is we come in after the fact. Hey, we're trying to get financing. The bank referred us in because the accounting's a mess. Business is at a standstill because they need the cash. They need financing. They're really feeling the pain of that. So let's help them to get to that point. But we see that's one of the things that we see quite a bit.
Is it because the way the P&L is organized in QuickBooks, or is it because the stuff on the balance sheet doesn't make sense? Or
it's both. A lot of times it is the balance sheet. A lot of business owners, they look at the P&L and they're, okay, hey, that's how my business is doing. What I will say, and I know this is the direction you're going, Rocky, is if your balance sheet is not accurate, your P&L is probably not accurate either. So there may be hidden costs that are hung up on the balance sheet. There may be revenues or something that hasn't been recorded effectively that is also impacting the P&L. And it's pretty obvious when a banker or an outside sophisticated individual looks at a balance sheet, they can know pretty quickly whether financials are in good shape and whether there's credibility there. From a P&L perspective, you obviously want to have it organized in the right way. It doesn't help. I don't think it doesn't help you at all to just, send the P&L with every single account that you have. A nice summarized version is easier for the bank to understand. The more you show them, the more they're going to look at it and ask questions that probably are not even material, but will take longer than you need to be taking, right? And so let's make sure we give them a nice summarized version that makes sense. If they want more detail or information, we can give that to them. But I think a nice summarized version of the P&L, a nice balance sheet that's also summarized effectively gives you the credibility, presented in the right format. At the end of the day, we want to give the bank a package of the information so that they can just go through it, send it to underwriting, and get you through and approved versus the back and forth. Will I get this loan? Will I get this financing or line of credit? Will I not? And that's what we see, as best practice.
And a lot of times, banks are looking at ratios, and they're looking at how things tie to each other. And if you don't know that, while you think the balance sheet and the P&L look good, the ratios might tell the bank it's high risk. And they have certain things that they're just automatically looking at. So you have to be clear on what those are before you go to them and be able to do that.
Yeah.
And the same thing goes.
Love assets. They love assets. They love current assets. They like reduced liabilities, and they like a strong equity function or retained earnings within the company.
And that they do. And again, it also depends what you're borrowing for. If you're borrowing from real estate, it's a very different process. If you're borrowing for a piece of equipment, it's different. If you're borrowing for just operating expenses, it's a very different story. Or if you're just borrowing for factoring to cover incoming inventory, it's a different story. So again, the purpose of what you're doing makes a difference to the people who are going to lend for that. Absolutely. So you just have to be aware of it.
Yeah. And for the bank, it really comes down to collateral. How in the worst case situation, how will they get repaid? And when you talked about real estate, well, the collateral is typically the real estate, the building, the land that you're acquiring. And so it's easier for them to get comfort and without as much reliance on the financials. Same with equipment. If equipment's worth a certain amount, they can have some level of collateral there. If it's operating or working capital, as you mentioned, well, then it's based on the business, right? And so they need to have comfort that the business cash flows effectively to pay down that loan. And then it comes down to the ratios that you were talking about that they look at. And for small business owners, to ultimately to the personal net worth of the individual that's ultimately going to have to guarantee that. It's very, very rare that a bank would not make a small business owner also sign a personal guarantee in addition to the business.
And so your personal finances also need to be in order.
Right. That goes along with it, right? I mean, we talked about this before we jumped on, but personal financial statements as a business owner, when you do have financing, when you do have a personal guarantee, you have to update those at a minimum once a year and provide to the bank. So I think it is best practice to have a process to ensure that you understand what your personal financial information looks like.
And that is very true. You deal with a lot of larger, smaller businesses. Do you find that the owners are appropriately paid, or are they still struggling to appropriately pay themselves when they get to your level?
Yeah, it depends is usually the answer. It's a difficult balance because when a business and a business owner starts to see success, they want to and they deserve to receive the fruits of their labor. They deserve to participate in the profitability that they're driving. That being said, if they want to continue to grow, they need to be able to reinvest back into the business to effectively do that. And so what we, with our clients, what we do a lot, in a lot of cases is talk to them about what are your personal goals and what are your business goals and how do we align those so that you're getting appropriate compensation from the business, but also able to achieve the goals you have for the business without sucking the business dry of all the cash it has, right? And we've seen that before too, where business owners, they took all the cash out and now the business is struggling from a cash flow perspective, is now late, is having to pay their vendors late, potentially damaging relationships they have, and really creating a lot of strain and stress for the team at the business and the business as a whole. And so there's a balance between what are your personal goals, how much cash do you need from the business personally versus what are your goals for the business and the growth that you would like to see as you move forward.
I'm a very big fan that if you're going to reinvest in your business, there better be a return on that investment above and beyond just in the business. But for you taking cash that you could have had and putting it back in the business, you ought to be compensated for that too. And if you don't plan that out and take it, you'll burn through cash like there's no tomorrow. It's amazing how that happens.
Right. And a lot of that is what you talked about before, which is making sure you understand the ROI of the investments you're making and measuring that, understanding how to measure that to ensure that it is successful. And it's a critical component of when I'm going to invest in my business, I need to understand what my expectations are on the return of hiring an additional salesperson or buying a piece of equipment that may allow me to produce more, or moving into a larger facility. All of those, there should be a return that we should be able to see.
And that is very true. And you got to run those numbers. Otherwise, you're in for issues. So, I guess it's been for 5 years, we've been talking recession. We still haven't come. Well, some parts of the business has. How do we prepare and how do we ensure that if a recession ever comes, actually, I should say when, because it's not if, it's when. How do we make sure that we're in a proper position to sail through it?
Yeah, I would say the first thing is know your numbers. That's the foundation, right? If you don't have an understanding of your financial numbers and information, then there's not much you can do. You're trying to run the business in your head, and you can do the best you can do. So the first is know your numbers, understand your cash flows, and I would highly recommend to develop a budget, which then ultimately turns into a forecast that you can manage the business around. So those are the critical components. Make sure you have timely numbers, you have a budget that you can manage against, and you can update based on forecasting. So that's the foundation. And then the next is make sure we understand who your employee count is, and make sure that every individual, you start to understand what is the return. I'm investing in these people. Are they driving value to my business? What we see a lot of times is somebody may have been hired by a company or a business several years ago for a certain initiative and that initiative is no longer in place. And so now that person is not really holding the role that they were hired for, and they're really not providing a lot of value to the organization. And so it's obviously cutting and downsizing your workforce is a very, very difficult consideration and a very difficult choice, but understanding who's driving value to the business and maximizing value to the business is critical. So that's one step, is make sure we understand who's doing what and why they're there, and are they ultimately driving value. The next step where we look at quite a bit is the expense structure. So especially in software and technology costs, those costs, there's a lot of hidden costs that we see that the company's been paying for years, and they're really not using it anymore. They're not getting value out of it. And so we've identified, we do this on ourselves every year, and we were able to reduce our overall expense structure by over $100,000 a year. And that's significant. That can be significant. And it might be, $2,000 a month here and $5,000 a month here and so much more here. And that adds up, and you ultimately end up can really save yourselves quite a bit, and you can run more of a leaner operation. The next two steps are actually, there's a couple more. One is financing. It's best to build that banking relationship when you don't need the cash than after you've already needed it. So build that and build a relationship with the bank. I highly recommend local community banks. They tend to be more flexible. They can talk to you. They can really understand your business. You can build that relationship. Larger banks, you can still have that relationship. It depends on who you are, but the local banks tend to want to be out there. They can be more flexible with you, and maybe start to drive the process of getting a line of credit right now when maybe you don't need it, but maybe down the line, maybe you will if the economy starts to go into a recessionary period. A couple of other things, real estate with the remote workforce. Do we all really need as much real estate as we needed in the past? Do we need to be paying as much in rent and lease costs as we did? And then the final one is companies that have inventory or manufacturing or distributors. When you look at your inventory, essentially that is your cash on the shelf. So we want to make sure that we have enough inventory that's not going to disrupt our ultimate sales channel, but we don't want to be holding extra inventory, just in case that never comes. We want to make sure we're efficient and we have a good flow through of inventory, and we understand that inventory process so that we are, turning that cash into inventory and back into cash again very quickly versus having it sit on the shelf. And then when you do need cash, you have to sell the inventory at a discount because you need cash. And so we don't want to get in that process. And so those are some kind of high level quick hits that every company can really can implement.
And again, you have to prepare, always have a plan. Whether or not you need to implement it is irrelevant, but at least having a plan in place makes it easier in the moment and allows you to react faster in the situation. Because things turn quickly. Like COVID caused things to turn very, very quickly.
Mhm.
And I can tell you those businesses that had cash in the bank were able to pivot because they could sleep at night. And those that had a plan in place knew at least, hey, here are some action steps. Because once you get moving, you keep moving. But too often people get stuck. And when they get stuck, it doesn't take long till things run out. There's a lot of businesses don't have cash to survive for very long.
Right. Yeah, absolutely. And I think the plan is critical. Understand all those things I mentioned, you don't have to do today, but having an understanding of what you will do when you need to is critical. And again, it comes down to cash, how you use that cash, how you invest that cash, so you can, effectively run the business the way you want to.
And that makes a lot of sense. The last topic I wanted to touch on was fraud.
Mm-hmm.
And we are seeing a lot more of this. We're seeing it in ways that I don't think we've seen it in the past. Everything from I've seen checks intercepted in the mail and cashed, and banks aren't super helpful when that occurs. People getting into your systems and putting through fraudulent invoices. The other fraud that is actually, it's still fraud, is somebody buys something from you, pays you on a credit card, and 60 days later challenges the card.
Yep.
And the credit card companies tend to favor them versus you, which is not nice. And so all of these different things that are happening, and fraud is extremely expensive when it happens. I'd love to know your thoughts and how we prevent it.
Yeah, I think it really comes down to processes and controls. On the credit card side, if you accept credit cards, I mean, that's going to happen. So people are going to dispute it, even though, basically they are the buyer or the customer is committing fraud when they dispute it because they got the product, they got the service, and now they're trying to get away with something. So having a process set up, if you do accept a lot of high volume credit card transactions, having a process set up to be able to work through the disputes appropriately. Each credit card companies have a process that companies go through to manage the dispute process. They understand that customers will take advantage of that. It is a pain, but there's a process, and if you have that process, you can win back most of those situations. In the other situations, it's really again about having the right controls in place, oversight within the accounting function. The highest risk situation is when a company just hires a bookkeeper and says, okay, you be the bookkeeper, you do all this stuff, and I'm going to go run my company and not even provide any oversight, hardly ever talk to them again. That's ripe for fraud. That one individual has control over everything. They can create fake vendors. They can pay themselves in a lot of cases. We've seen in situations where we came in after the fact where the bookkeeper had control over payroll and they just gave himself a raise and nobody knew the difference. They also were able to pay themselves through fake expense reimbursements through payroll and nobody knew the difference. And so having one person in control of everything associated with cash and the outflow and inflows of cash is very, very risky. So at a minimum, there needs to be a process on payments. We recommend not even having physical checks. If you do, the outgoing payment should be approved, prepared by one person, and then signed by somebody else. Maybe the business owner signs all the checks. They get mailed out, maybe mailed out by a third person. We recommend AP process flows like a bill.com. Very inexpensive. It automates the process that does not allow anybody the access to be able to do anything with physical checks of that nature. Separation of duties is a big term in accounting, just making sure that one person doesn't have control over the other. I mean, fortunately, that's what we are there for. is we create those processes. We've come into a lot of situations where there has been fraud before we joined, but knock on wood, in 15 years, we've never had a situation while we've been working with a client where fraud has been committed or stealing of funds has committed from one of our clients because of the processes that we put in place to ensure that that doesn't happen. So at the end of the day, very, very high risk, no matter how nice the person may be or seem to be. If one person has control over everything, it's very high risk.
And a lot of banks even allow one person to go in and enter all the payments and somebody else, the business owner, to approve all the payments. And you can set limits and do all kinds of things, but you got to have those conversations to say, hey, we need controls in place. Never share your passwords. It's amazing how many people will do that. It blows my mind sometimes.
Yeah, the security, the electronic security is critical. Having defined process around passwords and how you use them. Even if you do receive checks from clients, most of our payments are through ACH. But if we do receive a check from a client, it goes directly to a Dropbox. So it doesn't even go to us. It goes to a Dropbox. The bank deposits it on our behalf. So nobody can physically touch anything on our side because payments are going out electronically. We have the oversight and approval processes in place, and nobody physically has the opportunity to pay that, to do anything with the checks that we do receive because we don't receive them. So.
It's amazing what goes on. And also two-factor authorization. It's a pain in the butt to constantly get texted a code. But in today's world, I think that's important. And, mail fraud occurs too. And they can just put in a change of address card for you. And the post office doesn't even care. So there's not the protections we're supposed to have are disappearing.
Yeah.
And you've got to be clear on what you're doing and making sure it's good. If people would like to learn more about you and your company, what's the best way for them to do that?
Yeah, the company is Signature Analytics, and our website is signatureanalytics.com. It's pretty self-explanatory. When you go there, it's easy to reach out. You can also reach me directly or our company on LinkedIn. My name is Jason Kruger. And you can also see our company there. Again, we want to help business owners achieve their goals, and by providing them the financial information that allows them to do that. We have about 75 full-time employees, really focused with industry expertise and verticals, and which you can see on our website as well. And we just love talking to business owners and helping them to grow and achieve the goals they want.
Awesome. Thank you so much for joining us today.
Thanks so much, Rocky. I really appreciate it.
What part of your systems are lacking, and where do you need to fix them? In case you're wondering what I do, my role is a profit center, helping you to make more money while working less. And I better provide a massive return where we can both agree to bench me. Do you have controls in place to prevent and detect fraud? Do you invoice and collect quickly? Are you ready in case of a storm coming? We help with this and so much more. As you grow and scale, you can do it without spending first, because you don't need more resources. You need to be more resourceful. And remember to focus on the bottom line.
If you'd like for us to be a part of your profitability journey, we have different programs available ranging from do-it-yourself to one-on-one coaching. Our course, The Profit Blueprint, teaches you everything you need to know to transform your profitability. There are 3 different tiers ranging from DIY to done with you so that businesses of all sizes can get the support that's best. Join the waitlist in the show notes to get more information and be a part of the next cohort. If you want a done-for-you service, you can hire us as your Chief Profitability Officers. We only work with a handful of clients, so they all get our full attention. We work with business owners who have or are growing to $500,000 to $10 million in revenue. You can use the scheduling link in the show notes to get on our calendar for a good fit conversation to see if we're the right people to support you and how we can help you.
Remember to check out my other podcast, Richer Soul, where we talk about how to live the ultimate life and be the best business owner you can be. As we close out, let's repeat the mantra. Revenue is vanity, profit is sanity, and cash is king. Have an abundant and profitable week.